I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. Let's look back at what happened in the financial markets in the past week. And to look forward at what might happen in coming weeks. And hopefully lots of great ideas and opportunities for you throughout this show. Well, after last Friday's 1,000-point drop in the Dow, the stock market had a lot of trouble holding on to rebounds. Investors focused on disappointing earnings, some chaos in the currency markets, China lockdowns, and of course, the Russia-Ukraine war. Monday, China collapsed, down 5%, and the U.S. followed, but recovered to small gains as buyers are trying to get in and pick these bottoms. But Tuesday, we saw GE and JetBlue have very bad earnings and moved the markets down. And add to that, Tesla fell 7% as Elon Musk confirmed he will buy Twitter. And, of course, he needs cash to do so. Actually, it was reported that he sold $4.5 billion worth of Tesla this week. It says he won't sell any more, but I know for that deal, what I read anyway, is that he needs more cash. Monday sellers really never stopped, and it was a deluge of selling at some points in the day. S&P's down 125 points and the NASDAQ down 530 in a really rough day. Wednesday, mixed earnings came out. Visa and Microsoft were both good and the stocks rallied, but Boeing and Google was bad. And our analysis on Google shows that stock in trouble with a likely decline into August. The market actually chopped pretty much, but investors were scared as the dollar moved up 0.8%, and the euro and the yen in collapse mode. That chaos in these currency markets really has investors worried. Also in the news on Wednesday, Russia cut gas off for Poland and Bulgaria because they won't use rubles to buy that gas. S&P 500 all over the place then on Wednesday, up 55, down 20, up 68, up 5, finishing up about 44 in what is an extremely choppy environment. Traders got to love it. Investors got to be scratching their heads. Thursday, Bank of Japan came out and said they will buy all Japanese governments at 25 basis points. They are defending their yield curve. That's known as yield curve control, where they work hard to decide what the yield curve will be and completely disregard the free market. So they want to protect yields. They don't want them to go up, but they don't care about protecting the yen that is in crash mode. This is the house of MMT. Actually, our central banks and other ones won't even take the lesson from them. And Japan is setting up an economic nightmare. And they're already in one. They have the largest debt in the world. So they can't let rates go up because if that would happen, well, their economy will collapse. Of course, it's going nowhere anyway. And with the yen in this big decline, they're in for a lot more trouble. U.S. GDP came out also on Thursday, and that was a shocker, down 1.4% and for the first quarter, and that makes the recession potential much higher. And what a joke on our Fed. I mean, they're blaming COVID for that minus 1.4%. It's just ridiculous. They stimulated the economy in a way that was just nonsensical, and now things are pulling back from that, and this is their fault, of course. The Fed fund rates for here in the U.S. still at 25 basis points, and they're just starting their tightening cycle. Can you imagine that? Here with our economy potentially in recession, growth at negative, inflation at crazy numbers, they're just starting their QT. I mean, this is, I don't even know why we give the central banks the power we do, because they are just absolutely clueless, and they put this country in very dire straits. Thursday, I'm going to keep lecturing here. It was a pretty wild day. Facebook up 17% to start the day, pre-market. Big gains with S&Ps up 75 points. They take a dip. And all of a sudden, buyers come in. They push the S&Ps up 120 points. It pulls back before the close, up about 80, but then Amazon and Apple both spoiled the party. Amazon, well, they reported a loss. They blame it on their Rivian investment. Ford had a similar problem. But truth is, their sales have slowed. Apple was up at first on the beat, but then in the conference call, they warned for the next couple of quarters, and they're not even going to give guidance anymore. It shows you how much in the dark they really are. They've raised their dividend 1 cent, so that's about a 5% increase in the dividend. They said they're going to buy back $90 billion in stock. Boy, I'll tell you, these companies never learn. Apple would be better off giving a $3 special dividend. Let the investors have the money and pay a 15 or 20% tax rate on that special dividend, and that would only cost them $55 billion for that, based on their stock float. These stock buybacks are plain out dumb. Just ask the airlines, who got themselves in huge trouble. The Facebook, that relief that came on that stock, well, that was the slowest growth ever for that company. So that bounce, in our opinion, is false. Friday, back to selling. The markets were down anyway overnight on the Amazon and Apple earnings, and that was despite China's 3% pledge to support that market, and with that gain in China being about 3%. The S&P 500 was down 50 points pre-market, helped also on the downside by Intel reducing its guidance, giving those warnings. And then the news came out, the Fed's very watched PCE. That's the way that they look at the at the inflation rate at a 40-year high, and the Eurozone reports record 7.5% inflation rate, and the selling here just continued right into this midday period, with the S&Ps now down 85 points. Amazon, let's just talk about that for a second. What investors are realizing now is the stock plunges today very significantly. In fact, Amazon right now down almost 13%, is that actually it was a stay-at-home stock. All of that buying that was going on Amazon because people wanted their stuff delivered so they didn't catch COVID. I don't know why investors thought, well, that wasn't really the case, when all of these other stay-at-home stocks are down 60, 70, 80, 90%, a lot of them. Look at TDOC, 90% down. That is a tone change, and we think that stock is going down to about $23.50. These numbers that you see on their decline today, it's the worst since 2011, and that stock is not done going to the downside. I think if Amazon gets a rally, and I think the market will talk about the rebound that's coming, I think it's a sell. So the stock market has looked terrible. And every time it tries to tick up, it's met with sellers. Days that go up 120 points, like we saw on Thursday, well, that happens in bear markets. That doesn't happen in bull markets. Our original analysis from the start of the year was that the market would go down early in the year, start the bear market, and then have a rally into spring, maybe even test those highs or a little higher. Now the depth of the decline warns it's in worse shape. We still think that there's a rally coming into spring, but it won't get that far. And while the S&P tested the March lows already, the NASDAQ and the Russell broke them. And I'll show the NDX later on, the NASDAQ, as we do the stock market analysis, and you're going to find it very interesting. And this all says that the upside is very limited. But it's coming, and I think that's in line also with the bounce coming in the bond market. Yes, interest rates, I think, at least for the near term, are about to peak. The stock market, well, there's a low coming in the next couple of days, and that's very much in timing. This decline that's going on today, yesterday after the close, all in line with the low that we think is going to be coming sometime next week. Then we think for the next month or so, we'll say 4 to 6 weeks, it'll look better. That's the hook. Don't forget to sell. For the week, major indexes down 1 to 2%. Transport's still holding a little bit on the upside. Bond market, it's down about a point. The 10-year yield's up about 3 basis points. And we actually think that here at around 2.9%, it is about done on the upside, and that there is at least kind of a temporary rally coming in the bond market and a pullback in yields. Of course, that will all be in line with this stock market rebound we think we're going to see. Gold market down a little bit on the week, about $12. Silver down worse, about running around $1 on the downside. That was a horrible day for silver. I want you to see future speak for the targets that we have on the downside, and make sure you see that on Wednesdays. Remember, that's for levels 2, 3, and 4 at askSlim.com. Dollar, well, huge move. Absolutely. We don't see a lot of 2% upside weeks. That's what we had this week. Though now it's giving some signs finally of stalling. And we think that there'll be some minor pullbacks coming up here in the dollar. Oil, well, it has a pretty big gain in here this week, gaining about $6. And we actually think that the upside in oil will take it up near about between 111 and 115, where there's some resistance up there, but not get much higher. Coming up in this show, and I want you to make sure that you don't scroll forward. I know you're really anxious to see the stock market analysis, but this is a classroom show. We are teaching through this whole show. You're going to see Arvi give a preview of the country ETF member video, and he's going to look at Japan, EWJ. I'm going to then give a class on cycle analysis, and that lesson will be in the US dollar JPY. I wanted to address the Japanese yen because it is collapsing. Katie does a fantastic job in teaching around PayPal as she looks at the negative conditions in that stock and why rallies are likely to fail. And I'm going to look at the stock market and give you a deep look, including our proprietary indicators, on the NASDAQ and the X. I think also you will find them incredibly fascinating. So we have some unbelievably great stuff, and I want to make sure that you know to go to askSlim.com. Make sure if you are on YouTube right now watching this, subscribe to our channel and give us a thumbs up. And if you want to be notified about all of the videos that we post on YouTube, make sure you click that notification bell. If you're new to askSlim, you could become a free member or level 1 member, which gets tons of things on the indexes if you're an index trader. And make sure that Twitter, follow us at askSlim. Twitter in the news right now, lots of people signing up because of Elon Musk, and we are there on a regular basis. Questions about our memberships, info, questions on huge offerings of education and analysis, write Matt at askSlim.com. This is a preview of a member video, Stock Sectors Country ETFs. The illustration here by Arvi, one of our great analysts, is looking at EWJ, which is the Japanese market. He does a fantastic job teaching around this, and I think you're going to find it very interesting. So please do watch this. Again, we want to share our style of analysis with you. Take it, Arvi.
So this is the iShares MSCI Japan ETF, or the EWJ. And what you see here is really picture perfect cycle action here, and I want to take a couple minutes to just walk through this here with you. So for the EWJ, we have a dominant weekly cycle, which is broken up into minor half cycles. And we have drawn in how these dominant cycles have formed over time in this black trend line, as you can see right there. What we have done also is we've highlighted these yellow periods. Now, these yellow periods are when you're late in corrective periods, which means late in cycles. When you're late in cycles, there's risk on the downside. And what you'll see here in each of these periods is meaningful moves on the downside here in the EWJ in each of those time periods. Now, what I want to highlight also is this beautiful head and shoulders that has formed here with the left shoulder, the head, and then the weak right shoulder that then broke down. Where is the measured move of that head and shoulders? You can see that came in right here at around 56.5 or so, which is where we just traded to in this session. So really nice action in the EWJ, and it was really all set up from the cycle action. You can see this right shoulder that just formed here formed off of this cycle. You can see the cycle low formed right here. We had a very weak rising phase that then failed quickly, which said that this rising phase was over with, and we would look for this market to sell off going out into that next timing low. That next timing low was due 530 to 725. So we're still looking for further risk on the downside and for rallies to fail. You can see right here, we had a rally that looked really out of place when we were in a corrective period right here and late in the cycle. And you can see what happened. That rally failed sharply back on the downside to complete that dominant cycle. So if we were to get a bounce here, we would watch for that bounce to fail and then get one more sharp sell, likely on the downside, to form that dominant cycle low. On the downside, we have an intermediate 161.8 at 55.03. That is our downside target here in the EWJ, given this overall very negative condition that we see here.
All right, great work, Arvi. Thank you for that. I'm sure the members found it really interesting. This is the big picture analysis of the US dollar JPY. I'm going to give you a lesson in cycle analysis. Cycle analysis is the core of the work that we do here, and we're going to be teaching this throughout this entire show. It's made up, really, our analysis of 3 different components. If you go further into the analysis later on in the show that I do on the NASDAQ, I'm going to really take that into some deeper analysis, and you will really get descriptions of how we do this analysis. But I'm going to show you right now how we do the cycle analysis aspect of it, and I think you're going to really love this. So this is a chart of the US dollar JPY on the monthly. So this is pretty typical of what a lot of people would look at. Candlestick chart, starting out with basically a blank palette. This is a monthly chart that we're looking at here, and you can see what's going on is this big upside move. This is a reflection of the decline in the Japanese yen, because this is the reciprocal. This is US dollar versus JPY. So when the dollar goes up, this then tells you how many yen to the dollar. Right now, trading at around 130 yen to the dollar. So as the yen goes down, these numbers go up. And you can see in here lots of squiggles, and maybe very tough to identify when it's going up or when it's going down, and how long it will go up, or how long it will go down, or how far it will go up, or how far it will go down. Those are challenges that traders and that analysts really struggle to meet. So what I'm going to do is I'm going to advance this to a few more different charts so that you can get an idea of what our work is. So now what I've done in here is put in what we call cycle brackets and timelines. What this does is actually show you the rhythms in the market. Now, this is not a study. This is a drawing tool. And the work in here is done manually. But this shows you the rhythm in here, the rising phases and the declining phases. And you can see how clear those are. There's actually, in each of these harmonic families, there is a dominant cycle and a minor cycle in this case. Some cycles have 3 or 4 minor cycles in them. Where do the minor cycles line up? Well, you could see right in here the advance, and where it peaked way on the left side of this cycle, which is called the left-hand translation, and the decline into the halfway point. the rally again, and a decline where both of these push down and push it down very hard. You can see the end of it right over here fell hard, the end of it here fell hard. When you get two rising cycles moving, you get the big movement on the upside. As you can see in each of these right in here, where they moved up, this one of course failed early, and you can see that right in here. This was a bullish triangle that formed, and when it broke out, and I'll show you that, it took off on the upside. The dollar versus the Japanese yen taking off on the upside. And you can see right in here that this cycle right here is actually coming towards the end period right in here of the minor cycle. It has had no drop in here whatsoever. Now let's advance this to the next set of drawings, which takes the analysis even further. Now what we've done is put in the cycle lines on the top, where we're showing you the harmonics in here of 25 and 50 months, and also showing you how we then project. And I have one more chart that's going to help you with that. So this shows you the dominant cycle, and it shows you the minor cycles right in here. When you have a minor cycle that is very strong and then pulls back with almost no time to go, the next minor cycle is very likely to push up very hard on the upside. You could see that beautiful cycle pattern right in here with the two minor cycles very clear. Here's your two minor cycles right in here, but this was in a consolidation. So when this cycle peaked very early, then it set up this consolidation period. You can see in here now that we're beginning to project, and that is that the minor cycle comes down for a brief period of time. In other words, the energy, the corrective energy comes down, but it fights this much stronger, more dominant energy. It doesn't have much ability to fall, and then it begins to go up again. That's exactly what happened in here. The downside minor cycle didn't have enough energy to defeat this strong energy of the more dominant cycle, a small decline, and then a big advance. You can see the similarity right here, and right in here, and actually right in here. I'm going to highlight that for you again, and as we move into this area right here, and it gives you a lot of clarity about how these cycles line up. What we have in here are the green areas, are the positive translations, small corrections, and big jumps that follow. Right here, right here, right here, right here. You can see that this one didn't give you much because it was a negative cycle, and this one right over here set up to move to the upside. I have put in the target zones right there, and these are based on the Fibonacci extensions, and that says to us that there is a potential for, after some minor decline in here in the dollar versus the yen having a bounce, that this will move up. This points to about 139 to the dollar. This over here is about 149 to the dollar, and this is about 152, 153 to the dollar. So this is how we do our targeting in here, as we use the information that comes out of the cycle formations, add in the information on the swing high, swing low analysis, as we call it, with our projections. If I don't have any momentum conditions on here at all, but were I to be showing you that, it would be also showing you the positive momentum conditions that are existing, which is the third component to our analysis. So this is very clear, and you can see that clearly. Each of these green zones, when you had the minor corrections, each of those were followed by good advances. That's due right in here. You're likely to get a yen bounce or a dollar pullback in the US dollar JPY, and then be able to see the next advance that comes after that. So this would be in this decline into what we would have as a buy zone on our shorter term charts, and then using that pullback in here for the very likely next move to the upside. Of course, Bank of Japan came out today and said they are going to defend the yield curve, not let interest rates go over 25 basis points, without any regard to any control of the damage they've done to their currency. And rather than just letting interest rates float, of course, they can't do that because they're the largest indebted country in the world. And so what they have to do is continue to maintain low interest rates so that they don't go into economic collapse. But the collapse of the yen, which is very likely going to continue, is going to give them plenty of problems as they take on the inflation of the rest of the world. Everybody's importing, especially the U.S., our inflation to them, and what we're getting is something that's disinflationary. And that eventually is going to affect the dollar, but not quite yet. So what we see in here is all of our cycle analysis. I hope that's very clear to you. You can learn cycle analysis by going to askSlim.com and sign up for our cycle analysis workshop. If you go to that tab on the top of the page where it says workshops, there's great videos and information in there that just tells you about it. You don't have to pay anything. Of course, you may decide to take the workshop like hundreds and hundreds of other people have done before. So this is a lesson in cycle analysis, and the reason we believe that the U.S. dollar JPY will pull back temporarily and then begin to move up again. That is the big picture analysis, U.S. dollar JPY, and my lesson in cycle analysis. I hope you found it incredibly illuminating. All right, well, we're going to continue these lessons right now, as Katie is going to do a great charting lesson. And she looks here at PayPal. Now, PayPal has been crushed. And, of course, PayPal was one of those stocks that did very well based on the stay-at-home economy, which is gone. And there will be some residual in that, but basically they bid these stocks up to just insane prices, and now they've been coming down very significantly. PayPal, and Katie's going to illustrate this, and she'll show you how that shows up for our members and how they know about it, is going to show you why there is more downside risk in PayPal.
Hi, I'm Katie with askSlim. We practice a type of technical analysis called cycle analysis combined with momentum and swing high, swing low analysis. We also develop new tools for our members to highlight certain types of opportunities, and one that was recently launched is called the Cycle Low Timing Tracker. It helps our members identify certain types of both long and short opportunities. So what I'm going to do in this segment is walk through analysis of PayPal, one of our focus list symbols, and then show you how the Cycle Low Timing Tracker calls your attention to the opportunity. What we're looking at is a weekly chart of PayPal, and the semicircles here on the bottom are placed there manually with a drawing tool that helps us identify the money flow patterns into and out of a security. These purple spikes here show us where the actual cycle low occurred relative to the ideal, and you can see that for PayPal they line up very closely. These blue vertical dotted lines over here on the right-hand side show the weekly cycle timing window when we would expect PayPal to make its current cycle low and then to turn up as the next cycle begins. Two other aspects of cycle analysis are translation and configuration. Now, translation can be right or left hand, and it refers to where a cycle peak occurs. Both the cycle that we are in and the prior one are left-hand translations because they made their cycle peaks closer to the beginning of the cycle over on the left-hand side. Now, configuration can be positive or negative, and it refers to whether a cycle ends higher or lower than where it began. So both this cycle and the one prior are negatively configured since they end lower. Now, just visually, you can see that this chart does not look good, and all the aspects of cycle analysis that I just mentioned give us information about conditions in here and also have some predictive value that is helped by momentum analysis and swing high, swing low analysis. Our weekly charts show momentum using our proprietary reversal scout, which is the purple and green ribbon running through the chart. So recently we had this upturn in momentum as PayPal made a mid-cycle low and then moved up right on time into the rising phase of the second minor half cycle. But PayPal is really weak, and it couldn't even get into this resistance zone that we created using swing high, swing low analysis. Momentum then turned negative again, and we are taking another leg down down into that cycle timing window. The dates for that window are between May 23rd and July 6th. Now here's the daily chart of PayPal, and we perform exactly the same type of analysis on our daily charts as we do on the weekly charts. The only difference is that we have two momentum indicators on here, the same reversal scout as on the weekly chart, and then also the slim ribbon, which colors the candles red, green, or gray depending on the momentum conditions. And you can see that momentum in here is negative. Now, this current daily cycle that we're in ends between May 18th and May 26th, and the next daily cycle ends out at the end of June. Both this cycle and the next one are matching with the intermediate term weekly cycle timing window. When a current daily cycle ends within the intermediate term timing window, we call those cycles in different time frames in sync. And in sync cycles have a lot of downside risk because we have cycles in multiple time frames pushing down together, the more dominant weekly cycle and the shorter term daily cycle. Now, PayPal had earnings this week and got a little upside move, but because of where we are in the weekly and daily cycles, we would expect rallies in PayPal to fail. So we could set alerts, and if it gets up into the resistance zone between about 93.5 and 99, we would consider that a short side opportunity. Let's now go to the cycle low timing tracker and see how it calls our members' attention to the opportunity. So this is the in sync box on the cycle low timing tracker, and all the symbols in here are symbols from our focus list that have current daily cycles that are in sync with their weekly cycle timing windows. And here is PayPal. So to learn more about askSlim, cycle analysis, and all the tools like this one that we offer our members, please check our website at askSlim.com.
Just great work, Katie. I mean, I watched that and I said, you have a great skill at teaching this stuff, and really, really impressed with this work. Thank you. All right, stock market analysis coming up, but first, you can get our analysis and proprietary indicators. You've seen this throughout the show, and if you watch what's coming up when I do the analysis in the stock market, you're going to see how I apply some of these indicators. So you want to get our charts, you want to get our indicators, you want all that. You have to actually become a level 4 member. This is the final 2 days, as you can see. What you get by becoming a level 4 member is an incredibly discounted price, 35% off. You get our annotated charts, the entire focus list live on your thinkorswim platform. You can sign up for thinkorswim if you don't have an account. Open one up, please, through our website. You just go to the front page and then scroll, use the carousel scroll to the right, and then click on the TD Ameritrade symbol there, and you'll be able to sign up right through our site. You're going to get all of our proprietary studies, option bias indicator, market condition indicator, and our grids with our best indicators all on them for you to load up on your own website, on your own platform. You're going to get the TOS grid archive. That's all the trade ideas and the slim ribbon PO and reversal scout, all of that. You're going to get the market monitor, where all our proprietary studies can be looked at on any thinkorswim watch list, and access to our comprehensive Discord server, which is just incredible, the amount of activity we have on there, with Matt and Arvi and Katie doing a fantastic job answering all your questions, doing live things. Wow. And you get full membership access, everything in levels 3, 2, and 1. That's only $103.35. $103.35 for the first month. Regularly $159 a month. Just go to askSlim.com, go to the top of the website, you'll see that special offer there, and click on it, and you can sign up. Make sure you have any questions, write to Matt at askSlim.com. And we are going to support you. We're just not going to dump this all on you. We have video tutorials and usability guides and interactive Q&A with all of our analysts on Discord, live and recorded webinar events, and our very available whole team. We're here to help you, and you get most of your level 4. You'll get the best from your level 4 experience from our whole team. Special 1 month, $103.35. I don't need to show any of this to you because you're seeing it all through this whole show, and we want you to be able to get our information in to really up your success. So go to askSlim.com, top of the web page there, and click for that special offer, 35% off for the next month, and you get all of this stuff, all of our proprietary indicators and everything that we have, including our level 3, 2, and 1, and that's 600 videos in the library. I mean, you can do more learning than you will ever believe by becoming a level 4 member. All right, so what we're going to do now is look at the stock market, and we're going to focus on the NASDAQ, the weekly and daily, and I'm going to look at our level 4 proprietary charts in order to do this. Our level 4 members get these charts live for the Thinkorswim platform. You would have to have a TDA account, which you can open through our site, and also then you would upload all of this work onto the Thinkorswim platform. So I'm going to switch over now and look at the charts for the NASDAQ. This has our cycle analysis here on the NASDAQ, and of course we've been having a fairly large decline. The market tried to rebound and then it turned down again. Now, there are 3 components to the work I'm going to show you, and that to the work that you have seen illustrated in this show by RV and by Katie and by me, and I'm going to continue those lessons right now. So cycle analysis is a objective and a observational way to look at the market. These are cycle brackets on the bottom, and they are simply tools. A drawing tool that helps us recognize the movements in the market. The lows don't always line up perfectly. There is variance in the movement, and we use the actual movement to help us see what's going on. You can see in here, going back way into this huge pandemic rally that was going on as the Fed was pouring money everywhere and the government spending money everywhere, and the market had a massive gain in here. Now, looking at these 3 core components of our analysis, cycle analysis, momentum analysis, and support, resistance, projection, targeting, all of that helps us see the conditions of the market. Positive cycle, positive momentum. Small decline through this period, and then when the momentum turns up again, another big decline. The same thing here, and another big advance following that decline. These declines in here are very small, right here, here, and here, and all of this is configured bullishly. Each higher high and higher low says that the market is very likely to resume in a positive way on the upside. When it made this high, hitting that target zone right up over there, and then declined below this cycle low right here, it sets up what's called as a negative configuration. This shows a lot of downward energy. You can see where this red arrow is, and I'm going to zoom in here so you can get a better look at that, where that red arrow is. Let me just get all of this so you can see it clearly. I'm just going to grab this. Okay, so it got up right over here, hit that target zone, and where momentum turned negative, where that red arrow is, the market started to go down. It broke this key cycle low, and it put the market in a negative configuration. It rallied up to resistance. We thought the market would rally, pull back, and then rally back up and test this area out over here. That was always our analysis from the beginning of the year. Now what's happened is that this minor cycle has turned down and taken out this low right there. When that happens, the probabilities are high that the next rally in the next minor cycle will fail in this resistance zone, and that's why it's labeled as a sell zone. We expect that this big decline that's going on here on Friday will carry sometime into early next week, and I'll show you on the short-term charts why that's the case, and then move up in here, and then over, we'll say somewhere around 4 to 6 weeks, get up maybe into May, early June, and then begin to move down again. And right over here is a big potential downside wave, and another one right there. And as you can see in here, the projection is to get down to somewhere near those 35% decline, that bear market, or the major 61.8%. For our members received a slight revision on the charts as these cycles tightened up a little bit, and instead of projecting September, November, we're now projecting August, October for this decline right over here. It was a slight revision as these patterns are tightening up a little bit. So first minor cycle, second minor cycle, third minor cycle, potentially. Best case may be down here to 11.7. This is more like under 11,000 in the NASDAQ here, and you can see in here this downward channel, the negative 1, 2, 3, and now 4 negative minor cycles in a row, and very likely to see 2 more negative cycles right over here in this phase of the bear market that we see here in stocks. Let's take a look at shorter time frames in here and look at this absolutely gorgeous pattern in here where you could see the rhythms in the market on the daily chart. So here is what we call a full harmonic family made up of 1, 2, and 3 minor cycles. 1, 2, and the third minor cycle bottoming over here these next few days. This is why I say to you, in alignment with that low that's due on the weekly chart, that it's very likely that sometime between, let's say, Monday and Wednesday of next week, maybe a little later, this low will form, the market will go into a rally. If it gets below here, these resistance zones will get lower. So it makes sense that the NASDAQ will be able to rally up to about 13.8 to, let's say, 14.1 over this next period in here. Again, remember we said out into May, maybe early June. This is that alignment right here, and then the big drop happening again. So this is that window, and if you're a bull and you see the market rallying, as I said in the beginning of the show, you could get hooked right here because the risks are extremely high of another big drop. So it says that a low coming probably in the next few days. That will be a short-term low, and then a rally that is very likely to fail, followed by another big decline. I want you to see right over here that we have this indicator that I'm highlighting, the option bias study. We developed this indicator for option traders and to tell them when conditions are such that they need to bias their position in one direction or the other. Through these whole periods right in here, it was negative. There were a few periods where it got extreme oversold, and that gave little bottom warnings, and you could see how the market got bounces after that. It went positive right here, and you could be in a bias there. This would have trapped you a little bit as it then turned neutral, but then right over here, it gave you that negative signal again, where you needed to bias your option positions to the short side. That will keep you from getting run over by momentum. So that's a look at the proprietary level 4 study, the option bias indicator. Let's go to the next chart, and this is the slim ribbon and slim ribbon PO. This tells you when the momentum conditions are negative, and you can see in here when these negative conditions were negative, going way back over here, starting the beginning of the year. And all of these signals right over here are momentum resumption signals. They were really positive over here when the big rally going on. Here you could see what happened was that rebound came in the stock market. You got positive for a brief period of time as the market was trying to go up. It neutralized right here on this date, warning you that the upside momentum had ended. Here's where it said to you there's trouble, and here's where it warned you of downside resumption, and of course the market moved down very significantly. The slim ribbon right over here is available to everybody for free. If you have a Thinkorswim platform, you can just go to our website, get the script for it, and download onto Thinkorswim, TD Ameritrade. They're our preferred broker, so you can get that. The Slim Ribbon PO is a proprietary indicator, only available to level 4 members, again, for the Thinkorswim platform. Let's look a little deeper. And here is the 2-hour chart. And this 2-hour chart has on it another proprietary indicator, as you can see right over here. This is the askSlim MCI, Market Condition Indicator. This is an indicator that goes from 100 to minus 100. These middle lines at 25 and minus 25 are called the swing zone. When it tries to move here out of the swing zone and then crosses back under it, it's failed and negative. And you could see the numbers right in here are getting down right now to really minus 98, minus 97. Those people that are using our market monitor can see these numbers on there and all of our proprietary indicators for level 4. And you can see in here what's essentially happened is that this got essentially bad. When it failed right over here and warned you negative, the market was way up over here in the NASDAQ at about 14.2, and then of course falls all the way down here under 13,000. This is a 2-hour chart, as you can see, and really helps fine-tune for shorter-term traders. It's turned negative right in here when you look at the Slim Ribbon, and now it's neutral right here as the market had that rebound and is beginning to come down. This actually looks like it's going to turn negative again and maybe give a warning for the next few days in there. But overall, these are all very negative indicators. So what I showed you in here is the look at, whoop, didn't mean to go there. I didn't want to show you that, Russell. And I didn't want to go there. Going too far back and forth. What I showed you is our cycle analysis, which is clearly negative on all time frames. Our momentum analysis, which is negative on all time frames except neutral on the 2-hour chart and maybe turning negative. And all of our support, resistance levels, and projection targeting that we do. And all of this is quite a negative picture. A low due in the next few days, an attempted rally, hopefully into the sell zone, so we get to sell, and then big declines coming after that. That is a look at our analysis for the stock market. If you were interested in the S&P 500 or the Russell, which I didn't show, of course, sometimes we show those here for free in Market Week, but if you become a level 2 member, you'll be able to watch our Future Speak show on Wednesdays, and I go through all of this analysis in detail. If you're a level 4 member, you'll get all these charts. And if you become a level 1 member, you will then be able to get our stock index report that comes out daily. Matt does a phenomenal job with that. And he will then show you the static version of a lot of these charts in a very comprehensive type of report. And again, that's daily for only level 1 members. That only costs $45 a month. So if you're interested in getting this, and you're certainly learning to trade the indexes, please do become a level 1 member if you're not a member here at askSlim at all. What a show. We did just an amazing amount of teaching in this show. All of us right now, Matt was away for a couple days, so he didn't participate, but he always brings great stuff. If you're new, become a free member. If you're trading indexes, become a level 1 member and get our reports. YouTube, subscribe to the channel, click the bell, give us a thumbs up, and watch our member videos in the playlists and get an idea of what our past shows look like. Twitter, follow us at askSlim, and questions on anything I showed you in here, anything that Matt or Katie presented, write to, RV or Katie, write to Matt at askSlim.com, and he will help you with that. I want you to be so unbelievably careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm going to do a steady show.